Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, October the 19th. The year's 2022. Let's talk trading, looking at the money. These videos are for educational purposes only. Your results may differ from mine. Now, the reason I'm talking about looking at the money today is if you read some of the trading books and you listen to the YouTube channels or go out on the trading forums, they always tell you, no, don't worry about the money. Don't look at the money. Look at the charts. Well, part of the problem is that if you're not focused on the money, and that's the main thing in trading, is to make money, not lose money, you could wind up blowing things. And the reason I say that is because of one, we've talked about brain management before. I haven't put this screen up in a while. Because, see, once you take a loss, some of these can then start to kick in. Or sometimes if you take a little bit of money and then if you had only waited, it would have gone further, then some of these other things kick in. And you don't want any of those things kicking in. You really don't. And that's why you have your risk management in the first place. But you see, risk management is really a worst case scenario. Meaning, you don't want to lose any more in one particular trade than you're willing to lose. But you don't have to lose that much when you lose. So let's just say, make numbers easy, you have a 10 pip stop loss. Well then, if you're down 5 pips, you could scratch the trade because it'd be a lot easier to make back the money you lost on the 5 pips than the money that you would lose on the 10 pips. And that's something that some traders don't always recognize because they're so focused on, okay, I'm going to put my stop here, and if I stop out, I stop out. Well, you can cut your losses a lot quicker than that. Once again, this is the worst case scenario. So, if you're in a trade and you're looking at the chart, like right now, let's just say you want to take this double O trade to the north. You've got H1 green, H4 green, all these green. And let's just say you got in at double O. Well, right now, you basically flat. Maybe you're out your commission or spread. Like in this particular broker, we've got a spread here. And so, right now you'd be about flat. But the thing is, if price were to reverse and say get back to the open of this candle, which is 93.8, you'd be down a little over 6 pips. And if it's, if the candle turns red, it could keep coming down and maybe stop you out. But if you're focused on the money, you go, you know what? I don't want to lose all that money. Whether it's, $10 or $1 if you're trading a dime a pip, or if it's $1,000 if you're trading $100 a pip. So see, right now you'd be down. Let's see, okay, because if you were long, you'd be down a couple of pips. Well, yeah, a couple of pips. It's wiggling. And so you had the opportunity to take 1 pip. And that's not a lot. But the thing is, you're not down. And so maybe you wait it out. But the question is, if price isn't doing what you were wanting it to do, which is go in your direction, and it starts going against you, it's how far does it have to go against you before you decide to give up? Well, you know what your worst case is. So right now you see this candle is oscillating between red and green, and you're down about a pip right now. Maybe it shoots up, maybe it doesn't. We just wait. This is what you do in trading. You wait. Now you're up a pip. So now you're not sweating anymore, right? And let's just see what happens. Does it break the high of the previous candle? Maybe it'll run up to 10. Let's just see what happens. And so the thing about it is, if you're living and dying by the tick, then you really have to focus on the money. If you're placing your bet, whereas you entered the trade, you say, let's just say your stop loss here is at 90, and let's say you want to take profit because you're looking at the chart, you go, you know what, this is a return bar right there at 25 psychological. So you got your TP set for 25. Now, I don't think we have enough time in the video to see which one happens first, but that's where you place your bet. You might as well just walk away from the chart, have a couple of email or text alerts letting you know if you hit the TP or stop loss. There's no reason to sit here, look at the chart, and possibly go through the roller coaster ride, the emotional roller coaster ride, where in this case you were up 3 pips. Now you're only up, now you're up 2. Now you're only up just under 2. Because that too can play havoc with your emotions, with your brain management. Because think, every tick is either going to be for you or against you, and that either adds to your stress or maybe it alleviates it. But that's an emotional roller coaster, and that can just wear you out. So it might be smarter just to look at something else. Don't worry about what's going on a tick by tick basis. That's if you're placing your bets. Otherwise, you're saying, okay, maybe I'm up 2 pips right now. Maybe I should move my stop loss to the low of this candle or the low of this candle. Give it some room to breathe, but if it breaks it, so let's see, the low of that candle would be 93.8 right here. So maybe you put it at 93.5 or just 93. If it comes down there, that means it covered this candle completely and stops you out. Because see, you don't know what's going to happen. Because if you did, there'd be no market. You could just bet it all if you knew exactly what was going to happen. And so maybe you're going to let this 5-minute candle close, and maybe based on what happens here, maybe you decide to stay in, maybe you decide to exit. Oh, and I know some of you are curious what these indicators were here, because I usually don't talk about them much, but this is the candle color multimeter, and it also puts the chart period buttons up here. So we're on the 5-minute chart, and you can click any other one and switch charts. Then we got the multimeter new high low, and what this does is tells you if you're making a new high low compared to the previous bar. See the shift of 1. And so right now we are above this high, and if it makes a new high, then this will light up, I think, a brighter green like it just did. And then you see it, so every time it's making a new high for this candle, And then the multimeter inside bar. We've got the inside bar color turquoise, outside bar magenta, and then no inside or outside bar color is just dim gray. So you see we've got an outside bar on M1, inside bar on D1. So you can see here this was the outside bar, and on D1 you can see yesterday was an inside bar. So back to our trades, now we're up 6 pips. Now, as you can see right here, there's some congestion. We closed above 2010 one time. So if it makes the 2010, can close above, you might want to stay. But if it starts to reverse, you might want to get out of that trade and just take your profit. So maybe now we still got 3 minutes, almost over 3 minutes left in this bar. I think we almost have enough time to watch this bar to the end. So the question is, now you've got a certain amount of money that you can take off the table. So let's say we got 6 pips. Let's say you wanted to make $100 in a day, and you're trading, say $10 a pip. You just want to, so you want to make 10 pips. 10 times 10 is 100. Well, you're already over halfway there. In fact, you were at the high here, 09. So you were really close. You could be tempted to take that money off the table and then wait for another trade. Or you could be tempted to say, no, I really want to go for that 25 because I know based on experience it usually takes out these return bars. But as I mentioned, you can see here, price struggled. It didn't even cross the 10. Now you can take, you just gave up about half of what you could have had. And so once again, if you're managing the money, you might say, you know what? I was at 90. Now I'm at plus 80. I think I should take the money off. Maybe you get 80, 75. And now the next trade I don't have to go as far. But right now, you've just given back $60 of potential profit. And do you really want to go through that? So that's why you have to look at the money sometimes. Compare it to your daily goal. Where are you? How many times can you take bites of 8 or 9? How many times do you get that opportunity? You say, hey, this is a rare occurrence. I better take it while I can. Maybe you're always getting 2, 3, 4 pips. Maybe that's what you get. Maybe you only get 1 or 2 pips. Because that's what you're good at. That's what sometimes you're shooting for that. But, if you get in this situation where it was just kind of oscillating, from like +1, you were maybe -2, but it really wasn't threatening the stop loss down here. And based on, you had higher highs and higher lows, it wasn't threatening to pull back on you, so you wrote it out. Well, then the market actually gave you a nice reward. And if you're wondering, this is the what the ask is right here. That's the ask price as opposed to the bid price. So you buy here and you sell here. So fellow traders, I hope that helps because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.